Mercado Libre is one growth stock down 37.3% that I think you might regret not buying on this dip. Why do I think that's the case? Well, that's what I'm going to talk about in this video, so let's begin. So, the first reason why I like Mercado Libre stock, and I think you might like it too, is because of this phenomenal revenue growth. Look at this nice chart here of Mercado Libre's annual revenue going back 10 years. You see revenue below $1 billion here in 2014, and it's absolutely exploded up to 10.54 billion in its most recent year. Additionally, Mercado Libre, as you might already know, is sometimes known as the Amazon of Latin America. I like to think of it as the Amazon slash PayPal of Latin America because it's kind of like a combination of both. And given that it's so dominant in its region in Latin America, it's one of the most dominant e-commerce, if not the most dominant e-commerce slash online financial services company. And given that e-commerce in Latin America is estimated to grow at a faster rate than it's estimated to grow in the US. In fact, e-commerce growth in Latin America is among the fastest rates of growth in the world. So since Mercado Libre is one of the top companies in an industry that's growing, expected to grow very quickly, very nicely over the next few years to the next decade, it should continue to benefit from that tailwind and its revenues should continue to grow higher from here. The next reason why I think that you might regret not buying Mercado Libre stock on this dip is its improving operating profit margin over the trailing 12 months. You look at this chart here, its operating profit margin was falling as revenue was growing because more of its revenue was coming from lower margin segments of the business. Now, however, it's stabilized and recovered from negative close to 12% operating profit margin in 2020 all the way up to 9.81% and rising. So its profit margin has stabilized and is rising, and that's great news for Mercado Libre investors. Additionally, if you look at Mercado Libre's cash flow from operations over the trailing 12 months, this chart is explosively moving higher. You look at it, it looks similar to the revenue chart, only better in that it exploded from a little under 300 million in 2020 all the way up to 2.94 billion in the most recent trailing 12 months. So the company has done a really good job in turning revenue into cash flow from operations, and that's always good news to see from investors' perspectives. And finally, the last reason why I think Mercado Libre stock is an excellent opportunity right now is because of its relatively inexpensive valuation. You look at the price to free cash flow here at 25.47. That's just about as low as it's been going back about 5 years. So you haven't had an opportunity to buy Mercado Libre stock this cheap in many cases over the last 5 years. So this is an opportunity on this dip that you may not get and you may regret missing. So this is a chart of the price to free cash flow. If I pull up a chart here of the price to earnings, the forward price to earnings, it looks similar. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. It's a little bit more expensive in this metric. Price to earnings forward 1 year out is at 53.51, but still it's near the cheapest it's been. If you look back all the way to January of 2021, this is just about as cheap as it's been. Of course, it's been here for several months now, but this is not a usual case for a stock that is growing this quickly, with profits rising, with cash flow rising in an industry that's growing, right? So you haven't had this opportunity, and I don't feel like this opportunity is going to be around very long. That's why I suggest that this might be one growth stock you might regret not buying on this dip. All right, so that's all I've got for this video. Thank you so much for watching. I hope I'll see you again next time.